Hey everyone, welcome back to Corporate Decoder. Today BBBY-WT just filed a Form 8, announcing a merger agreement, and I am seeing a deal structure that might raise some eyebrows. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing details Bed Bath & Beyond's plan to acquire Fathom Holdings Inc, and it looks like a strategic shift focusing on a different part of the housing market. Alright, so what we have here is Bed Bath & Beyond, Incorporated officially announcing a merger agreement with Fathom Holdings Incorporated. This is a pretty big move for Bed Bath & Beyond, which as we know has been going through significant changes. The deal involves a merger where Fathom Holdings will essentially become a wholly owned subsidiary of Bed Bath & Beyond. After Fathom Merger Sub Incorporated, a subsidiary of Bed Bath & Beyond, merges with and into Fathom Holdings. The date of this report is the 16th of June 2026. Let's break down what this merger means for the shareholders of both companies. At the heart of the deal is the merger consideration. For every share of Fathom common stock that is currently outstanding, it will be converted into 0.2236 of a share of Bed Bath & Beyond's common stock. They are also mentioning cash for any fractional shares, which is pretty standard. Now, this exchange ratio, 0.2236, is subject to adjustments, and they've included an example calculation in the merger agreement itself, though we won't dive into the nitty-gritty of that today. What is particularly interesting is how existing Fathom equity awards will be handled. For Fathom stock options that are outstanding right before the merger, they will simply be terminated and cancelled without any payment. This is a pretty harsh outcome for option holders. Now for Fathom's restricted stock awards, these will be assumed by Bed Bath & Beyond and converted into awards for Bed Bath & Beyond's common stock. The number of shares will be based on that same exchange ratio we just talked about. This is a more favourable treatment than for the stock options. Similarly, Fathom's restricted stock units or RSUs will also be handled with a mix of outcomes. Some RSUs held by non-employee directors, which they're calling cancelled RSUs, will fully vest and be converted into shares of Bed Bath & Beyond's common stock based on the exchange ratio. Other RSUs, the assumed RSUs, will be converted into awards for Bed Bath & Beyond stock, again following the exchange ratio terms. Then we have the performance stock units or SUS. For those tied to stock price hurdles, if they vested based on performance up to the merger date, they'll be converted into Bed Bath & Beyond stock. If they haven't vested by the merger date based on performance, they'll be terminated without any payout. Other Fathom SUS that are not tied to stock price hurdles will be assumed by Bed Bath & Beyond and converted into performance-based RSUs. There is also a crucial clause here. Any assumed restricted stock, RESs or SUS, will become fully vested if the employee's job is terminated by Bed Bath & Beyond or its subsidiaries without cause within 12 months after the merger. This is a common provision to retain key talent during a transition period. What are the hurdles to get this deal done? Well, both Fathom and Bed Bath & Beyond need to satisfy several conditions. First, Fathom's stockholders need to approve the merger agreement. Then, Bed Bath & Beyond's registration statement on Form S-4 needs to become effective. And the shares of Bed Bath & Beyond's common stock that will be issued in the merger need to be approved for listing on the New York Stock Exchange. They also mention the repayment of certain senior secured promissory notes issued by Fathom in 2024, which Bed Bath & Beyond will need to handle at closing. Other standard conditions include the absence of any laws or orders preventing the merger, representations and warranties being true, and no material adverse effects on either company. The agreement also includes typical representations and warranties from both sides, where each company is essentially confirming certain facts about their business. Fathom has also made covenants, which are promises about how it will conduct its business until the merger closes. This usually involves not making major changes without the other party's consent. A significant covenant from Fathom is that it won't actively solicit or engage in discussions for any alternative acquisition proposals. This is designed to keep Fathom focused on this deal with Bed Bath & Beyond. However, there are exceptions allowing Fathom's board to change its recommendation under certain circumstances. Like if a superior proposal comes along or due to an intervening event, but they have to follow specific procedures. What happens if the deal falls apart? There are mutual termination rights. The merger must be completed by the 16th of December 2026, or the deal can be called off unless an extension is agreed upon. If Fathom stockholders don't approve the merger, that is another termination event. The agreement also allows for termination if one party materially breaches the agreement. There is a termination fee structure in place if the agreement is terminated under certain situations, especially if Fathom's board changes its recommendation. Fathom will owe Bed Bath & Beyond a termination fee of $2 million. If the stockholder approval isn't obtained, Fathom will reimburse Bed Bath & Beyond's expenses up to $1 million. In connection with this merger, Bed Bath & Beyond and Fathom have also entered into voting and support agreements with certain stockholders of Fathom. These stockholders have agreed to vote their shares in favor of the merger and against any competing acquisition proposals. They've also agreed not to transfer their shares during the term of the agreement, with some exceptions. These agreements help ensure that the necessary shareholder approvals are likely to be obtained. Now, this filing points to more detailed documents like the full merger agreement and the voting agreement, which are filed as exhibits. They emphasize that these agreements are between the companies and shouldn't be treated as statements of fact for investors to rely on directly, as they reflect negotiations and risk allocation. This is a standard disclaimer to manage expectations and potential liability. And here we have the list of exhibits. The key ones are the merger agreement itself, marked with an asterisk, and the form of voting and support agreement. There are also a couple of other exhibits related to formatting for SEC filings. Some schedules are omitted but will be provided to the CC upon request. This section is important. It is a warning about forward-looking statements. Basically, anything in this report that discusses future plans, expectations, or potential outcomes should be viewed with caution. The company is saying that actual results could be very different from what they predict due to various risks and uncertainties. They list things like the timing of the merger, satisfaction of closing conditions, regulatory approvals, potential litigation, and the ability to integrate Fathom's operations. They also refer to their risk factors section in their previous filings, which is where the real details on potential problems are usually found. This part tells investors what to expect next. Bed Bath & Beyond will be filing a registration statement on Form S-4, which will include a proxy statement for Fathom's shareholders, and a prospectus for Bed Bath & Beyond's shares being issued in the merger. They are strongly urging investors to read these documents carefully when they become available, because they will contain vital information about the transaction. They also provide links to where these documents will be available, including the SEC's website and the investor relations pages for both companies. This section addresses who might be considered participants in soliciting proxies from shareholders. It means that certain directors and executive officers of Bed Bath & Beyond and Fathom could be seen as encouraging shareholders to vote for the merger. The filing says that details about these individuals and their interests will be in the proxy statement team prospectus. It also directs readers to prior filings for information on the directors and officers of both companies. Finally, this section clarifies that this communication is not an offer to sell or buy securities and is not a solicitation for votes or approvals. It is important to note that it is not a prospectus either. Any offering of securities will only happen through a proper prospectus that meets SEC requirements. They reiterate that the Form S-4 filing will contain the prospectus and proxy statement for the transaction. So, what is my take on this? Bed Bath & Beyond is clearly making a significant pivot, moving into the real estate services sector through this acquisition of Fathom Holdings. This is a departure from their traditional retail focus. The exchange ratio and the treatment of Fathom's equity awards are key details here, with options getting wiped out completely, which is quite aggressive. The conditions for closing and potential termination fees are standard for a merger of this nature. The future for Bed Bath & Beyond hinges on whether this strategic shift into real estate services, which is hinted at by other recent news about acquiring Kirkland's stores and co-branded locations, can revitalize the company. My biggest concern is whether this move is too far removed from their core brand identity and if they can successfully integrate and manage a business like Fathom Holdings. The risk I am watching is if this diversification is a desperate measure that dilutes their brand further rather than a strong new growth engine. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.